have you ever seen any of these famous value investors and thought to yourself, damn, like I wish I could be like them. I wish I could learn from them and be able to at least emulate some of their success? Well, in this video, I'm going to share with you a list of the most famous value investors, but most importantly, what it is that you can learn from there that's going to make you a better investor yourself so that you can emulate part of their success. Okay, so starting up this list, we have none other than Warren Buffett, the greatest investor of all time. Buffett is known for his disciplined value investing approach and his ability to find undervalued companies.
I said, investing is just about assigning yourself the right story. I said, imagine Ben Bradley this morning said to you, what is the Washington Post company worth? What would you do? You have to write the story in a month. You'd go out and interview TV brokers and newspaper brokers and the owners, and you'd try and value each asset. I said, that's what I do. I assign myself the right story. And it's nothing more than that. Now, there's some stories I can't write. If you ask me to write a story on, what is some glamorous but nonprofit making business worth, I don't know how to write that story. But if you ask me to write a story on what is Potomac Electric Power worth or something like that, I can write the story. And that's what I'm doing every day. I'm assigning myself a story and then I go out.
He has an unbelievable track record, having generated an average annual return of 2,199% for Berkshire shareholders since 1982. This has earned him a net worth of around $96 billion. For those that are looking to become successful value investors, there's nobody better for you to learn from. Warren's approach focuses on business facts and takes advantage of the irrationality, the fear, and the emotions that are constantly taking place in the stock market. The best way to learn from this investment legend is to read his letters to shareholders and watch his annual shareholder recordings. Both of those resources are free and they're going to be linked in the description so you can take advantage and become a better value investor. Next up, we have Charlie Munger. Charlie is the vice chairman of Berkshire Hathaway and Warren Buffett's long-term business partner. Munger has been incredibly successful in his own right as a value investor, and similar to Warren, his approach is to find the highest quality companies at reasonable prices.
When he started looking for investment values in great businesses that were temporarily under pressure, it changed everything for the better. Now we could scale up to the big time.
Charlie Munger has been described by Bill Gates as one of the wisest men that he's ever met. Munger is a great thinker and has a lot of interesting things to say about investing and psychology. The best way to learn from him is to read his own book, Poor Charlie's Almanack, which includes countless lessons about life and investing, as well as watching his video on YouTube where he talks about the 25 cognitive biases that affect human judgment. Both of those materials are going to be linked in the description. Next up, we have Bill Ackman. Bill is the founder and CEO of Pershing Square Capital Management, a hedge fund with over $18.5 billion in assets under management. He's known for his aggressive investment style and willingness to take large bets on companies he believes are undervalued.
Fundamentally, stocks are driven and business value is driven by business fundamentals, not supply and demand for securities in the short term, not the weather on certain days and these various signals that are used by quantitative traders. I'm not saying there's anything wrong with it, but I don't think that even quantitative trading works unless there are a lot of people making fundamental investment decisions.
Altogether, Bill has accumulated a net worth of around $3.3 billion. One of the best ways to learn from Bill is to read his letters to investors, and you can also check out his beginner educational series available on YouTube, explaining important investing concepts for beginners. Both of those resources are going to be available in the description. For the next value investor, we have Monish Pabrai. He's the founder of Monish Pabrai Investment Funds, a hedge fund with over $1.2 billion in assets under management. He's known for his contrarian approach to investing and his focus on finding businesses with strong fundamentals.
The biggest edge would be attitude. Charlie Munger likes to say that you don't make money when you buy stocks, and you don't make money when you sell stocks. You make money by waiting. And so the single biggest advantage a value investor has is not IQ, it's patience and waiting for the right pitch, and waiting for many years for the right pitch.
Pabrai has generated an annual return of 11.4% for his investors since 1999. The best way to learn from him is to read his book, The Dando Investor. You can also check out his personal blog. Overall, you will see that he's a great thinker and has a lot of interesting things to say about investing. Again, those resources will be linked in the description. The next value investor is Joel Greenblatt. Joel is the co-founder of Gotham Asset Management, a hedge fund with over $14 billion in assets under management. He's also a professor at Columbia Business School and the author of several books on investing, including the little book that beats the market. Greenblatt is known for his focus on finding companies with solid fundamentals at reasonable prices.
And I guarantee my students' first day of class, I make a guarantee every year. They walk in and I guarantee them this. If they do good valuation work of a company, I guarantee them the market will agree with them. I just never tell them when. Could be a couple weeks, could be 2 or 3 years, but if they do good valuation work, the market will agree with them. Stocks are not pieces of paper that bounce up and down and you put complicated ratios on, like Sharpe ratios or Sortino ratios. Stocks are ownership shares of businesses that you are valuing, and if so inclined, try to buy at a discount.
If you want to learn from Joel, I highly recommend that you read his book, The Little Book That Beats the Market. It is a great introduction to simple investing and contains a lot of valuable information that you could actually use right now to beat the market. Most importantly, the information presented in the book is simple and you can start applying it today. The link to the book will be in the description. The next value investor is none other than Seth Klarman. Seth is the founder and the CEO of the Baupost Group, a hedge fund with over $30 billion in assets under management. He's also the author of Margin of Safety, one of the most popular books on value investing. Klarman is most known for his conservative approach to investing, focusing on finding companies that are of great quality but also have a strong margin of safety.
Value investors have to be patient and disciplined, but what I really think is you need not to be greedy. If you're greedy and you leverage, you blow up. Almost every financial blow up is because of leverage. And then you need to balance arrogance and humility, and I'll explain what I mean. When you buy anything, it's an arrogant act. You're saying the markets are gyrating and somebody wants to sell this to me and I know more than everybody else, so I'm going to stand here and buy it. I'm going to pay 1/8 more than the next guy wants to pay and buy it. That's arrogant. And you need the humility to say, but I might be wrong. And you have to do that on everything.
If you want to learn from Seth, I highly recommend you read his book, Margin of Safety. With the principles in his book, you will be able to ensure that you earn a high risk-adjusted return over time. Last but not least, we have Peter Lynch. Peter is the former manager of the Magadellen Fund, one of the most successful mutual funds in history. Peter is also an author and has written the book One Up on Wall Street. Peter encourages individuals to use their unique knowledge and expertise that they've accumulated over their careers to be able to capitalize by investing in good companies in the stock market.
Well, I don't think people understand there's a 100% correlation with what happens to a company's earnings over several years and what happens to the stock. If the company, McDonald's has done very well as a company,
right,
the stock has done very well. People worry about too much money supply, what's happened to the price of oil, who's the president, who's being nominated for the Supreme Court,
it's all
the ozone
earnings.
layer. It has nothing to do. McDonald's earnings go up the next 10 years, the stock will go up.
If you want to learn from Peter Lynch, there's no better way than to read his book, One Up on Wall Street. The book contains a ton of valuable information, including the principles that Peter learned to beat the market and to become one of the most influential investors in recent history. I hope you enjoyed this video. If you did, please make sure to subscribe, turn on the notifications on so that way you get notified every time we create a new video that's going to allow you to become a better stock market investor yourself. Thanks for watching. I'll see you in the next one.